and get started. My name is Christian Nieves, founder of a company called Pivot to Profit. We're a forex education company. We teach people how to become profitable in the foreign exchange market. Most people who enter into this market are not profitable and never will be profitable, and that's because of a lot of different things. It's because of lack of experience, lack of a proper education, and lack of knowing what it takes to have a profitable strategy and having a proper trading plan along with a proper psychology, risk management, every single factor of a trading plan that creates a profitable trader. I'm not going to lie to you, there are 1,000,001 different strategies and all of them probably work. So I'm not here to go ahead and tell you that my strategy is the absolute best strategy and that it's going to give you the best ROI compared to anybody else. I'm here to teach you different things that are going to help build on your own personal strategy. My whole theory behind teaching people how to trade is not to teach you my personal strategy, but to teach you how to develop your own trading strategy based on a few simple rules that everybody has to have in their trading plan in order to become profitable. So today's topic is obviously what your mentor doesn't know and institutions know most traders will never understand. A lot of people don't understand that you guys coming in here as retail traders, you guys are at an extreme disadvantage compared to other people in the markets. We're talking about banks, institutions, hedge funds, proprietary firms, people who are trading with millions or tens of millions or hundreds of millions of dollars. All right. And they have to trade differently because they're trading with this much money. Now, a lot of people will say you need to trade like an institution, and it's not really possible because institutions are able to move the markets. Institutions are able to put in such a high volume of trades, such a high volume of liquidity into the market that they actually are able to move the markets and manipulate where the market's able to go. So us as retail traders, we can't do that. But what we can do is identify where the institution traders are manipulating the market and figure out how to jump onto the boat with them. All right, they leave little footprints, little markings on the charts where you can tell where the institutions have dropped their money and where the market's going to most likely end up going. So we're going to use USD CAD as a good example because US dollar and Canadian dollar are two very strong currencies that are manipulated highly in the forex markets. So this is going to be a good example to show you guys where these little footprints are that you guys can use to help in your trading strategy and help understand, wow, these institutions, you can really see where the money is. And once you start seeing where the money is on the market, you can see where retail traders are placing their money and losing out on these trading opportunities because most retail traders are on the losing end of the trade. It's just statistics. If you go ahead and look up fundamentals, you can go ahead and look at where most retail traders are trading and where most institutions are trading. And most institutions are trading in the opposite direction as retail traders. So you don't want to trade like a retail trader and you can't trade like an institution trader. So you need to figure out how to trade in a different method than what everybody is basically doing. And that's how you can help yourself become profitable. So super basic. Everybody on here should know a little bit of the basics about Forex if you guys have been following me, looking at my content. If not, and you guys know nothing about Forex, what a pip is, nothing, I highly suggest you guys go onto YouTube and check out some Forex basic videos. I'm not here to do that. I'm here to teach you guys stuff that nobody else is teaching so that you guys can see the kind of value that we bring to our students every single day. All right. So going into this, we can identify from, you want to always go from the biggest picture going and then zooming it into the smaller picture. So we're on the monthly time frame. We've identified our monthly highs and monthly lows, okay? This is going to show us where price is, where the money is on the monthly time frame, where big amounts of money are coming in and changing the long-term direction of the market. And as we can see here, we have a floor and a ceiling that's easily used to be able to reference that this is our range. All right, another tip that you guys should write down is that on one time frame or another, the market's always ranging. So you guys might identify that the market's in an uptrend on the 4-hour time frame. Great. However, on one time frame or another, it's always ranging. So this market was in a bullish trend on everything on the weekly, the daily, the hour 4, maybe even the hour 1 at most of the time during this time period. However, the market is ranging on the monthly time period in between these two zones. Okay. So it's a hard concept to grasp for some people because they're like, oh, the market's either consolidating in an uptrend or a downtrend. Well, actually, it's always consolidating on at least one time frame. So you can use that to basically trade from zone to zone. You just need to know where's the optimal place to enter. Okay. So now that we have that covered, let's break it down to the weekly time frame. Okay. And I've marked a key zone on our weekly time frame as well, just to save ourselves some time. Okay. So we can see this mid-range zone in between our monthly zone. And this is where price is kind of getting magnetized to in between these two zones. So we can see sell pressure, buy pressure, more buy and sell pressure here, clear sell pressure here, turning back into buy pressure, and now buy pressure again. All right. And now we can see clearly that although we were in a clear downtrend here and a clear uptrend here on the weekly time frame, on the monthly time frame, this was easy to see that this was a ranging market, right? And this is what I'm talking about, how the market's always ranging, even though on the smaller term time frames, you might see a significant up or downtrend. All right. And this is just going into basic stuff so that we can get that out of the way. And then we're going to go into the part about learning about institutional trading and what they're doing in the market that's messing all of you retail traders up. Okay. So we can obviously clearly see that this is a clear uptrend right here. However, we have not one set of sellers coming into the market right here, but two. So this is basically showing us that we came up to this monthly zone and a bunch of money got dumped into the market to sell. There was a ton of people dumping sells into the market. All right. But then market dropped super, super quickly. So the market needed to come back up and grab a new set of sellers into the market. And now we're able to change direction. So now we're looking at a short bias on USD CAD, potentially all the way down to the monthly zone. But we need to keep in mind this weekly zone right here. All right. Let's take this down to the daily time frame now. Okay. So we're on our daily time frame. And we've identified another couple mid-range zones and our trend line from before, right? Very, very simple. And now we can see clearly, taking the big picture and putting it in smaller terms, this was that first impulse wave of sellers into the market. Then the market ended up coming back to this trend line, found some buyers coming back into the market, and we came back up and grabbed more sellers once we got close to that monthly zone to push price down. Now, this is all fine and well, but how are where are institutions placing their money? What's going on, okay? So you got to realize that there's multiple institutions battling all the time to try to get the best entries. And when you're putting in hundreds of millions of dollars into the market, you can't put them all in like we can and just put like one lot right there. It doesn't work like that because they're working with hundreds and hundreds and hundreds of lots. They're working, let's say, just to put a number out there, let's say 50,000 lots. All right. In order to fill 50,000 lots of sell orders, you need to have 50,000 lots of buy orders being exchanged at the same time. Okay. So how do they get that many sell orders? Well, they need to get people's sell orders to close, because when your sell order closes, it turns into a buy order. Okay. So here's what they're doing. The market spikes down very sharply. So what are a lot of traders doing? They're now selling into the market. They're selling into the market. They're selling into the market. Or traders are looking at the 4-hour or the 1-hour time frame, and they're seeing, all right, we had some sell pressure right here. I'm going to sell into the market. And where are retail traders going to put their stop loss? Think about this. They're going to place this sell order right here because we had a nice break and retest. Awesome. Or they're going to take it at the trend line or maybe right at this level. It doesn't matter. Doesn't matter where they take it, somewhere in this zone, because they start seeing a little bit of rejection on the 4-hour, 1-hour, 15-minute, whatever time frame they think. Okay, and where are they putting their stop loss? Most of the time, they're putting it right here, right above this structure right here, because they don't think this trend line is going to break, this structure is going to break, none of it's going to break. So in order for institutions to get enough volume for their sells to get filled, they need to get people's sell positions. So if there's too many sell positions, they need to have those sell positions turn into buy positions. When they do that, it's basically triggering stop losses. So what are they going to do? Market's going to spike down quickly, but guess what? Let's say this is like I don't know, just for an example, 100 million in sell orders right here, all right? Or 1,000 lots, just to keep it into lot sizes, 1,000 lots, all right? What they're gonna do is they're gonna go ahead and they're gonna place, I don't know, 500 lots of buy orders right here, okay? And think about this. If you're trading with hundreds of millions of dollars, you can hold drawdown, correct? And they're trying to do the same thing that we're doing. They're trying to get a net profit at the end of the day. So they place 500 lots of buy orders against the people who are selling, which causes a retracement, all right? This causes a retracement, and then what happens? People who have their stop losses too tight, that stuff gets triggered. So now there's a bunch of orders that they can pick up as sell orders. Because if your stop loss gets triggered, now they can take, who's taking your sell, all right? Your sell gets closed by buying into the market. So if you bought with a one lot, all right, in order, when your stop loss gets hit, what your broker is doing is basically placing a buy on your account, which basically closes out that position. Because if you sell one lot and you buy one lot, it's zero. So that closes out your position wherever it's at. So every single stop loss for a sell is a buy order. So all of those buy orders, the institutions are basically picking up those orders as sell orders. All right, so then they can go ahead and put sell orders and put 10,000 lots of sell orders now, all right? So then what happens? The market crashes down. So think about this right here. The market's pushing down, all right? Market push down, push down, push down. Institutions need to get a good position. So what are they doing? They're pushing the price up by putting in a bunch of buy orders, triggering stop losses, so now they can put in sell orders, all right? All they need to do is net a small loss or break even on this 500 lots, or even just close this as a loss, because guess what? They have much higher sell orders going in, so they're net profiting. So what happens? Market pushes to the downside sharply, but look what happens right here. Market comes back up and retraces a little bit. This is where they can close that manipulation that they did in order to have the market continue to the downside. So what do we as retail traders need to look for? We need to look for where they're basically doing these buy sells or sell buys. So the market's going up, it spikes up too quickly, all right? They don't control price. But when price moves a certain way and it moves very quickly, what can they do? They can basically place the opposite order. Because you as a retail trader, I know anybody who's traded before, they've traded a news event or NFP and they see the market spike down. And what do rookie retail traders do? They place, if they see it spike down, they're going to place a ton of sell orders and they're going to get filled super late. So the market, let's say this was a news event and the market spiked down super quickly. People are going to try to place sell orders and they're going to get it filled here and here and here. And then what happens? The brokers see that same sell move. The institutions see that same sell move, whatever you want to call them. Brokers, institutions, whoever has the real big money, they see that same big move. But what are they doing? I don't want to enter at this price like these retail traders are doing. I want to enter at a good price, all right? Because it's all about buying low and selling high. So they're going to bet against you. They're going to bet against you, push the price up. You guys are all going to lose, and then they're going to go ahead and sell again at a better price than anybody else, right? They're going to sell at these better prices. So this is what we're looking for. We're looking for these buy sells, right? And a good example is something like right here. And we're going to go ahead and zoom in on this right here and bring it to the 4-hour time frame. All right, we look at this 4-hour time frame and think about what retail traders are going to be doing here. All right, we just hit a daily structure and we see price actions pushing up. So what are retail rookie traders going to do? They're going to place buy position, buy position, buy position. Okay, that's completely fine. The broker will even buy with you. And then what happens? The price is going to push up. That's fine. Then they're going to put a wave of sell orders in and price pushes down. And this is called basically a buy and then sell. all right? Because there's a little bit of money pushing this up, but there's a lot more money pushing it down, all right? And this is what people are doing in the market. This is what these big market makers are doing in the market, all right? So how do we avoid that? Well, a couple of things we can do. We can wait for double confirmations like we saw in the monthly time frame, all right? We see this nice double confirmation. It's even clearer on our weekly time frame, all right? Because when money comes into the market right here and it drops very quickly, what are retail traders doing? They're selling. So what are the institutions going to do? They're going to buy. They're going to buy this all the way back up to get it to a nice price where they can sell it off again, okay? So you guys see a nice huge sell-off, and you guys are jumping in here and here and here and here and getting all these late entries, and the institution's like, all right, we'll buy the hell out of all these orders, net a profit, and then we're going to go ahead and sell when the price is at that nice sell area, all right? It comes to this sell area, we get more double confirmations, because now if we look at this on the daily time frame, we can see right here, one wave of sell orders, two wave of sell orders. Bring this to the daily time frame. Not 1 minute, daily. All right, we bring this to the daily time frame. Now what's happening right here? We have one wave of sell orders, we have another wave of sell orders coming into the market, and the market completely drops to the downside, okay? So these are different things that we can look for in the market. We're not looking to catch these huge, just drastic drops and get these late entries, because what's going to happen is the market's going to reverse on you every single time. And you might even be in profit on this, but what are rookie traders going to do as a mistake? They're going to go ahead and put their stop losses at break even too early, or they're going to put their stop losses too tight, and it's going to get hit every single time. So gotta stop thinking like a retail trader, stop being so emotional, and look for where the money is in the market. All right. So this is basically everything that I wanted to go over on this call. And this happens even on your lower time frames. All right, we can see here. Let's look at the market right here. We're gonna go ahead and draw our little trend line like every other retail trader is gonna do. And we see a nice break to the downside, okay? And now what's gonna happen? Let's go ahead, go back. First mistake that's gonna happen is people are gonna go ahead and buy in right here when they see rejection, okay? And there's just not enough confirmation right here. I don't see any strong impulse of buy pressure right here. So first mistake retail traders are gonna do, they're gonna lose on that trade. What's gonna happen next? Traders are gonna go ahead and take sells because they see this strong bearish price action. But what's gonna happen with a lot of retail traders, especially the ones who are scalping, who are trying to get really tight stop losses? They're like, all right, well, we have resistance right here. So I wanna be able to use a really strong lot size and over leverage. So I'm gonna put my stop loss right above this resistance. Their stop losses get hit. Why? Because big money is seeing big markets, whatever market maker, whatever you want to freaking call them, is going to see, all right, price shot down. All right, well, we want to get in at a good price. So what are they going to do? Put in a bunch of buy orders. All right, those buy orders are going to trigger your stop losses. So then what's going to happen? Your stop losses turn into more buy orders. Now the market's overbought, and they have room to put their money into sell orders. All right, think about this. If they're putting in a ton of buy orders, they're putting in 10,000 buy orders, right? And there's another 10,000, or let's say 20,000 sell orders. But this is enough to make an impact on the market, let's say. So this makes an impact on the market. It pushes to the upside, all right? Well, now a lot of these stop losses get hit. Let's say a majority of them get hit. Another 10,000 get hit. So now there's 20,000 buyers, right? Because 10,000 sellers stop losses got hit, and they bought 10,000, okay? So now there's 20,000 buyers and 10,000 sellers. So now there's more buyers than sellers. So what are they gonna do? Now there's room for them to place sell orders. So now they can go ahead and place sell orders. Since the market's overbought, there's more buyers than sellers, and they can sell when everybody else is buying. and maybe you weren't buying, but maybe you were in a sell and your stop loss got hit, which is the same as placing a buy order, okay? So then what happens? Market completely crashes right after that. All right, and this is what's going to happen all the time in the market, which is why first off you need to let your trades breathe, give your trades room, and you need to identify and have multiple confirmations before you enter into any of these positions. All right, this is just a quick brief rundown of manipulation, where smart money is in the market. I don't want to go too in depth with it and confuse everybody, but we're going to go into a Q&A now. For anybody who has any questions, whether it's related to this topic or not, just go ahead and ask away. And then after, we're going to go ahead and do a special promotion. So you're saying get in and out with the bigger institutions. No, I'm not saying get in and out with the bigger institutions, because we can't basically see that. We can't, so you can see it, but you can't react as quickly. All right, because the market's just going to wick down very quickly. So another example right here. All right, here's a clear support and consolidation. All right, here's a clear consolidation. Now on the 1 hour time frame, 15-minute time frame, 30-minute time frame, these are breakouts to the downside. So people are thinking, all right, what's going to sell off? But what this is institutions pushing price down by selling. All right, they sell it so that they can grab buy orders here, because anybody who was going ahead and trying to buy into the market, let's say that there was too many buyers, they need to get the market to where it's oversold so that it actually pushes up. So what do? They place a ton of sell orders, pushes the market down, okay? They grab a ton of buy orders now, because now the market's oversold, and now they can become the majority by bringing in buyers. Market pushes to the upside, now they can take their profits. They can't take, and then the same thing, how institutions can't place all of their trades at one exact price, they can't close all of their trades at one exact price. So what happens in the market is they have to close off their position in waves, because they have such a large position that there's not enough people to basically take the opposite position. So they close off a bunch of their buys here, and some sellers take it because they see a resistance, okay? Now the price comes down, all right, comes to a support, buyers come back into the market, right? So it pushes back up. Now they can close the rest of their buy positions. And where does price ultimately end up coming down to? Where they can basically net break even on their sell positions, all right, that they placed to move the market down, okay? So now we can look at this and say, all right, well, when price comes back into this zone and I start seeing buy pressure, I'm going to go ahead and buy into the market long over here. This is what I'm talking about, looking for their footprint and then reacting to it later, because that same level where institutions are buying is the same level where they're going to try to buy again later, okay? So they try to buy again here, okay, and close off their sell positions at a break even. And we get 1 confirmation, 2 confirmation, 3 confirmations, and price shoots up. Why? Because first off, they need to break off their positions right here at break even, so that they don't have a loss on here. And they already closed their buy positions that were up here. You can see 2 waves of sell orders coming in, which means buy positions are closing, and then price comes down. All right, so this is what I'm talking about with looking where institutions are putting their money and then trying to react to that at a later date. We can't react to that at the same exact time, because there's no way that we can buy right down here. There's no way you have enough confirmation to try to buy down here on a breakout of consolidation. But when we see that price was manipulated back up into here and then pushed higher, when it comes back down near that zone, then you can go ahead and buy again, and what happens? Price pushes higher. What computer do you recommend for trading and chart work? Any computer, to be honest. I use a MacBook Pro just because I've had a Mac for probably the past 6 years. As long as your computer is not slow and you have a pretty stable internet connection, that's all you really need. Some people get all technical with it. Some people go ahead and buy some huge computer monitor and put 20 different screens up. I just don't need that. I need my simple chart, break things down from the monthly time frame, and that's it. What other questions do we have? So we have 9 people on the call right now. We had about, I think, 12 or 13 before. Remember, like I said, if you guys were on here from the beginning of the call, after this Q&A, we're going to be going over our special offer at the end of this webinar. So last chance to get in some questions in. Can I go over a pair really quick? Yes, let's do it. CHF, JPY. All right. CHF, JPY. Let's take this from the monthly and bring it down. So pretty clear. We have clear buy sensitivity at this level. All right. We see a wick right here recently where price pushed back up, and sell sensitivity turning into buy pressure, back into 1, 2, 3 waves of sell pressure. So those are our 2 monthly zones. All right, we can also see that we're kind of in a squeeze right now from the monthly time frame. Price has been slowly making lower highs with the same lows. All right, bring this to the weekly. Now from the weekly, you can see this nice mid-range zone right here. We see buy pressure turning into sell pressure, back into buy pressure, sell pressure, bunch of confirmations right here, sell pressure. Okay. Now we bring this over to the daily time frame. All right. We see a nice volatility wick. This was that flash crash coming down to the monthly zone. See 1, 2, 3 rejections from this daily zone right here, and a previous strong rejection after this strong push to the downside. Okay. So what were we looking for on this trade? All right. I was in this trade long from last week. I already closed out. Okay. Now looking at this, we had a clear 1, 2, 3 rejections. All right, but this is consolidation, right? 1, 2, 3 consolidations, push to the upside, markets manipulated back to the downside to be able to get those buy orders, and market pushes back up. All right, we have a clear break and retest right here. Very simple. Okay, so what do we see here? Very slow price action, all right? And a lot of JPY pairs are pushing to the downside. So what we're looking at is basically potential. Overall, price is bullish, and price should come up to this weekly high. All right. This rejection from this resistance right here tells me that price may not be ready to move all the way up right now, and that we might be looking at a potential another retracement to that level of support. All right. I don't really see too much else as far as confluences as to why this is going on. All right. We could just be seeing some consolidation in this zone. But overall, the market is definitely bullish to push up to this weekly zone, and we should see that push over time. Depending on the type of trader you are, is going to depend on how you can attack this. All right, if you're a short-term trader, you're going to look at much different things. I would not be looking to trade this right now with all of this choppy price action. You don't have clear levels of support and resistance, so I'd mainly be looking at this long-term, waiting for price to potentially retest down to this zone, and then go and look for buy entries long. Look for those signals that price is getting more buy sensitivity and pushing higher. Let's see. Any last questions in the chat? Nothing. All right. So what I want to go over right now is a special offer we're doing for all of you guys that are on this webinar, okay? First off, I want you guys, if you guys are interested, to DM me after this, and you guys will get 1 week free trial to our program. All right. Anybody who DMs me, they're going to get a 1 week free trial. But basically, you get 1 week before you get charged for joining our community. All right. We have different packages and different offers. You can either do month to month, which is only $99 a month. All right. I see people charging $500, $250, $300 a month for similar courses and education and material like this. All right, so $99 a month is a price point that I think everybody can afford. And if I could offer this to you guys for free, I would, but I spend a lot of time and effort, and I have people working with me on my team as well that I need to pay and help and make sure that the lights stay on, okay? So $99 a month. If you guys don't want another monthly bill, because I understand it, all right? I hate monthly bills. I have my car paid off. I keep all my bills to an absolute minimum, okay? If you guys don't want monthly bills, we have a lifetime membership, which is basically you get access to this as long as we're still doing mentorship, a minimum of 1 year. All right, it's $500, one-time payment. Don't have to worry about it ever again. What does this include? All right, this includes, first of all, access to our members only login page. All right, so when you get to this page, you're gonna have 14 plus videos that you're gonna be able to learn exactly what we've been teaching you on this call, along with a bunch of other information. You're gonna see market outlooks where we're basically going over what we potentially want to look for the rest of the week. What you're also gonna get access to is my watch list and my partner's watch list, Arnaud, and see what trades we are currently looking for to take in the market with detailed notes on where we're looking for entry reasons into the market. All right, multiple trades every single week. If you guys checked out our Instagram page, you can see that June's results just on my watch list personally, I did 2,544 pips with 548 pips in open trades that are still running. Okay, now we go ahead and we can also look at my partner's watch list. All right, you can see all of the trades that he's taken. I'll let you know whether he closed at break even, closed in profit. You can see all of the different trades that he's taken right here. 194 pips on this trade, 191 pips on this trade. All of these are trades and detailed analysis so that you guys can not only take these trades, but also learn why we're looking to take these entries into the market. All right, you're gonna have these courses. What you're also going to have is we do 3 to 5 webinars every single week. These webinars are gonna range from live trading sessions during news events, NFP news events, different high impact news releases where we're gonna trade live, New York session live trading, where we're gonna use the volatility of the 9:30 a.m. New York market open to be able to help you guys get some quick scalp trades in and out very quickly with some high accuracy. You're also going to have training webinars where we're not trading, we're just teaching you different concepts like we went over today. All right, and then obviously the signals that you guys already mostly have because you guys are getting this for free. All right, so the signals are always for free. Lastly, you're going to get access to our community chat, which is on Telegram, where you guys can ask questions, post your charts, interact with the other traders, and learn together. We have some really good students that have been with us 8, 9 months already and are amazing, and just continue with us because they're always growing and always learning. Okay, so that's everything that's entailed. If that's not something that you're really wanting to do, awesome. Then you don't need to take advantage of the free week offer. But we do have other free tools for you guys to be able to use. Okay, we have our official forex podcast. This goes over a lot of trading psychology. This goes over a lot of psychological things which is usually a big reason why most traders don't profit, is their own psychology. All right, so there's free forex podcast. You go to our YouTube channel, we have a bunch of free webinars that we've done from in the past that you can watch and learn from and see what we've taught in the past. And lastly, on our Instagram page, we obviously also have free videos breaking down different trades every single day that we try to post them. So make sure to check all of that out. Anything that you look it up is just always at Pivot to Profit. So I'm going to drop it in the chat box. You can look it up on Spotify, Google Podcasts, Apple Podcasts, YouTube, Instagram, everywhere. The more you give us support, the more content we can put out and more content that we can help other people learn. So make sure to check all that stuff out. If you guys want to take advantage of that free week trial, send me a DM today. Like this offer for the free week trial, I need you guys to DM me tonight before midnight so that I can get you guys into our system and get you guys into that free week trial. So if that's something you're interested in, make sure to send me a message. Thank you guys so much for jumping on this webinar. I see we dropped down from 14 people all the way down to 7. So for those of you guys who stayed with us, thank you so much. Have a great night.